The largest IPO in history is bleeding out, and the part that could actually crush it hasn't even started yet. SpaceX, priced at $135 a share. In its first week, it touched $225. Today, it trades below its IPO price. But there's a date nobody's circling on their calendar. Miss why that date matters, and you catch the falling knife with both hands. August 4th, SpaceX reports earnings for the first time as a public company. 2 days later, August 6th, the first wave of locked-up IPO shares is freed. More breakout in August, then more in September, and it's just the beginning. So what are the real stakes of this lockup release, and why is Wall Street still bullish on a stock that keeps falling? Hey, welcome to New Stock Signals. I'm Bill Smith, founder of Renaissance Capital, which for over 30 years has analyzed more than 11,000 IPOs. I read every comment, so be sure to share your thoughts below. Nothing in this video constitutes personalized investment advice. Always consult your own financial advisor before making investment decisions. If you own SpaceX, you're about to sit through the single largest lockup expiration in recent market history. Roughly 900 million shares eligible to trade starting in early August. If you're thinking about buying the dip, you need to know whether you're catching value or catching the knife on its way down. This one's for the serious investor, the person who reads the filing, not just the headline. By the end of this, you'll know more than when the supply is coming. You'll understand what's actually being sold. Let's step back for a moment. Lockups are one of the oldest mechanics in the IPO playbook. When a company goes public, insiders, early employees, funds, executives agree not to sell for a set period. It protects the stock in those fragile first months. Then the lockup expires, and history is clear on what tends to happen next. Cycles rhyme. When a stock is already weak going into an unlock, the expiration doesn't cause the damage, it accelerates it. New supply arrives exactly when demand is shaky. We've watched this pattern for more than 30 years across 11,000 plus IPOs. The names change. The mechanics don't, but SpaceX broke the standard template in one important way. Most companies use a single 180-day lockup, one date, one cliff. But SpaceX isn't most companies. When it went public, only 5% of shares traded freely. The other 95% were locked up, so it built a staggered release to handle the sheer size of the IPO. Shares come out in tranches, some tied to earnings, some tied to the stock price itself. This design is the whole story. Most people are treating this as one question. Is SpaceX a buy or a sell? Wrong question, and it creates a huge blind spot because SpaceX isn't one business. It's three bolted onto one launch platform and one founder, and each one is worth something completely different. Call it the three-wing trap. Let me explain. Think of it like this. Imagine buying a house. One wing is fully renovated and generating rental income. One wing is a construction site positioned to pay off in a decade, and one wing is on fire. You don't pay one price per square foot. You price each wing. Let me walk you through the three wings. Wing one, Starlink. This is the cash machine because millions of subscribers now pay every month, whether a rocket flies or not. In 2025, the connectivity segment generated over $11 billion in revenue. Segment operating income more than doubled year over year to $4 billion. Learn to value this wing on its own to understand where value may sit. Wing 2, the launch business, Falcon, Starship, the rockets. This is the construction site, a decade-long infrastructure bet losing money today because it's building the rails for tomorrow. Not a broken wing, but unfinished. What matters is how you price it as a long-cycle asset or a quarterly loss. Wing 3, AI. SpaceX folded xAI into the company in early 2026, and this wing is bleeding. Training frontier models burns cash faster than almost any business on Earth. The AI segment lost over $6 billion from operations in 2025 and another $2.5 billion in the first quarter of 2026 alone. The key insight lives in these three wings. When the lockup opens and insiders start selling, they're not selling SpaceX. They're selling three businesses for one blended price. The three-wing trap in motion, and once you see it, you can't unsee it. It's an inefficiency the market has to work through in real time under heavy supply. It's a reset on what these wings are actually worth, and it begins in August. Now, before you make your call, let me hand you the lens I use. So when the lockup date comes, you know what you're looking at. First, separate the supply schedule from the story. The unlocks are mechanical, roughly 20% after August 4th earnings. Another slice around August 21st, more in September. These dates are in the filing. You don't have to guess. Mark them. Watch how the stock absorbs each wave. Second, watch the price-triggered unlock. Here's a detail almost nobody's talking about. Some shares only release early if the stock trades a certain percentage above the IPO price. A sharp rally doesn't just feel good, it arms more supply. Strength creates its own selling pressure. It's a trap the excited buyer never sees coming. Third, price the wings, not the ticker. When you see SpaceX quoted at one number, train yourself to ask, what's Starlink worth on its own? What's launch worth as a long cycle asset? And how much am I paying for an AI segment losing billions? The single quote hides three answers, and here's the mistake to avoid. Don't confuse a falling price with a bargain, and don't confuse a mega brand with a floor. It's SpaceX. It can't go much lower as a feeling, not analysis. Discipline means knowing what you own before the supply hits, not after. Now let me argue the other side, because I owe you honesty over certainty. If it's all downside, why is Wall Street still bullish? Fair question. Most analysts covering the stock right now rated a buy, with a median target well above today's price. One major bank made the case plainly. If the stock crashes, you could pay next to nothing for the AI business while undervaluing Launch and Starlink. So this cuts both ways. A lockup flood could drive the price down to a level where the cash-generating wing alone justifies the whole company. This is the bull case. It's real, but I don't know where the bottom is. Nobody does. What I know is heavy, scheduled supply into soft demand tends to create better entry points than the ones available today. One more clarification, because it matters. Elon Musk's own shares, billions of them, stay locked until the middle of 2027. The founder isn't selling into this, which is a solid signal, but it also doesn't stop the other insiders who can. The honest answer isn't buy or sell. It's wait for the supply to clear and know which wing you're buying when you do. Let me bring this together. SpaceX flew because almost none of it traded. It's falling as reality resets the price. And starting in early August, locked up supply breaks out in waves. Waves tied to earnings and tied to the price itself. Underneath the single ticker sit three very different businesses. One driving the cash, one building the future, one burning capital today. The reset is the market pricing all three in public under pressure. This is exactly the kind of moment I wrote the new AI Stock Edge for. It gives you the exact framework you just watched. How to separate the AI business model from the AI story and how to think clearly when everyone else is reacting. Link to pre-order in the description. If this helped you see the setup differently, subscribe. I read every comment, so tell me below. Are you a buyer into the lockup or are you waiting it out? This isn't about chasing the headline. It's about building a way of thinking that still works when the noise fades. The flood of SpaceX shares is coming. But when the rest of the crowd is reacting to one price, you'll be reading three. That's the edge.